Hello and welcome back to Investing Fundamentals. I'm Miles McQuillen, a member on the private client group at GAMCO. Last week we extended on our value equity strategies, discussing our small cap value separate account strategy. We're going to take a 1-week break from our equity strategies and provide a high-level overview of growth stocks and growth investing. On one of our first episodes, we discussed risk appetite for an individual investor. For those who have a higher risk tolerance, or in other words, are willing to stomach more risk with regard to investments, growth investing in this episode are relevant to you. A growth stock is any share of a company that is anticipated to grow at a rate significantly above the average growth for the market. These companies typically do not pay dividends, as any earnings are typically reinvested to accelerate growth in the short term. Without dividends, investors focus more on earnings growth to drive capital appreciation. Growth stocks are not limited to any specific sector or industry and typically trade at a high price-to-earnings ratio. In some scenarios, the company may not even generate positive earnings, but are expected to in the near future. These companies also may hold certain patents or cutting-edge technologies, or show indications of a disruption in a given industry that justifies the higher valuation. However, if their expected growth does not come to fruition, investors may suffer significant losses. As always with investing, with greater potential for gain comes added risk for loss of investment. While some of this may be a review for many, we just wanted to provide a foundation for next week's discussion on large cap growth strategy that Gabelli offers. As always, thanks for tuning in and see you next week.